Check, 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 check. Mic check. Checkity check. All right. Good evening, everybody. Glad to be back here with y'all. And hope everyone's having a good evening. I know it's a little bit late, so I don't expect a lot of people to be here. But nevertheless, we will prepare for the market tomorrow. Today was a pretty good day. I wasn't able to trade, but at least the price went up to the weekly levels that we talked about earlier. And so let's take a look at tomorrow and what we can look for in the price. So tomorrow we're going to be taking a look at Wednesday here, and we see that Fed Powell, Jerome Powell, is going to be talking at 9:15 a.m. Expect a lot of volatility then. We're going to see some pretty wild moves because algos pick up on everything the Fed chair says. And another thing that we typically see pretty big volatility on is the 10-year bond market auction. Why is that? Well, a lot of these can spur a lot of buying and selling depending on what gets released. So following that, 2 o'clock, we've got FOMC bar member, so that might lead to a little bit of volatility there, but very little compared to Jerome Powell in the morning. So that's what we get to look forward to tomorrow. Today, what happened today? So we take a look at today's market, we can kind of get a sense of what happened earlier in the day. So I want to draw your attention today to the price action that occurred at open and what happened at the 10 a.m. Kind of like 10 a.m. open there as well. So if you recall, during real-time hours, many times you'll see me pull open a chart here. And it's a chart that I'm not sure where price is at the time, but I do know where price ended the previous day. This is called the real-time hour chart. So once price opens, you can mark where it opens at, and you can get a sense of the real-time opening range sentiment gap from a low to high. So what ended up happening immediately within the first 5 minutes or so, we see that the opening range gap was settled. This gap from this open, from last night's close to this open on real-time hours. So that is something that I continue to refer to, and particularly today, it's quite important that it occurs, is able to happen in that way. So taking a look at today's price action as well, we could see that I believe it was on, so I believe it was on the first one that we saw, the first area of liquidity was this 15-minute fair value gap here. You can see that price went down to no further than that fair value gap low, right? So what does price do after then? Well, let me make this into a buy side and balance template so I can have this available on the lower time frames. So you can see this. We can see how price reacted at that point. And also the fact that this is a new week opening gap, we see that there's a fair value gap formed on the 1 minute here. Market structure shift. This still could have come down here and rejected here. So I actually was looking for this larger shift, institutional order flow entry. Basically, you have a fair value gap and a breakout gap. And you can see that price barely dipped into here before continuing to rocket up. And where does it aim for? Well, buy side liquidity, which is here. Okay. Once it hits that buy side liquidity, remember we had been looking for Go back to the morning of the live stream. You can see where I had mentioned before this happened that, hey, I would like to see, right now it's respecting this volume imbalance, but if it has the ability to go up further, I would like for it to see it trade up through this volume imbalance and then back down to it and treat it like a inversion fair value gap. So what does it do? It trades up into it. We trade up beyond it there. We trade back into it and immediately rebalance, right? Now what happens at the open? So we see price continue to rise up at the open. Boom, boom, boom. And right at the open, it drops. So all these people that went long might have gotten out there. But smart money, they are using this to rocket their positions up even further. So right at this moment is where you see the real-time hour gap close right there. So that's key level, right? We like to see those key levels, especially when we see bullish continuation. And we like to see that it respected this fair value gap, this volume imbalance, sorry, this black square here. We like to see that it respected it multiple times, right? So we wanted to see it use this as a inversion fair value gap, and it did. So price continues upwards. You could have taken this from around 15,235 all the way up to terminus, which would be right around here, 15,285. That would have been 60 handles right there. So if you're trading multiple contracts, that's where 50% of your position should have come off. What ends up happening, and what's kind of key here, and this is a concept which I also mentioned the other day. So let me see if I can pull this out here. So let me see if I can pull this out, because this is a good example of a mitigation block, specifically a bullish breaker. Let me highlight this on the other screen here. Okay, great. So in order to annotate this, I need to zoom in a little bit. So we see price moving upwards. It'll be easier to see it on the 1 minute. So we see a high, low, and then we see a higher high. So we see this breakdown, but we see it respecting higher time frame PD array here. So what we're looking for next is, hey, do we see a low, high, lower, low? And then do we see, when it gets here, do we see a market push above? We do. So now we're looking to see, hey, when it comes into this position, we are looking for evidence of it going long, right? So we see this nice, juicy pop up. We get a lot of longs in. We start to retrace lower. We jack those longs up a little bit, jack them up a little bit more. And what does it trade to here? Trades to this bearish breaker, trades to this bullish order block. And from that point onwards, that would have been a low risk long, because what happens the rest of the time? 15,280, you could have taken a long there, taken this up to about 15,320, and that would have been about 40 handles right there. And then, of course, what did we talk about the other day? This weekly SIBI high and this weekly volume imbalance, both of which get traded to by 11 o'clock a.m. So London close, you've already gotten the brunt of the trade. You can be done for the rest of the day. And what happens the rest of the day? It kind of just meanders around, you know. We see that it drops back down, comes back up, drops back down. That was a brutal second half of the day, I'm not going to lie. That had to have been very difficult to trade. So yeah, I think that's what happened today. That's what I would have in the morning if I wasn't in meetings and having to do some other errands this morning and going to work. That's what I. So what does that mean for tomorrow? So for tomorrow, we see this meteoric rise. There's been 1, 2, 3, 4, 5, 6, 7, 8 green days, right? If we look back, there's not many times where we see 8 green days up in a row in the recent history, right? So this is kind of telling here, and very much so getting the shorts out and thinking sentiment is long now. And once we, so now we are looking to see what happens at this level here, right? So we know that the bodies here, they want to kind of respect the bodies here, which this open here, 15408.25. The high here is 15412.75. So it gets there and then it immediately rejects. So my thoughts here, this is very, very, very powerful move, but we're approaching an area of liquidity here. So I think that we could target 15469.5. And remember, we had been mentioning this too, where we had the daily fair value gap sitting up here, one of the last remaining daily imbalances that remains to be taken on the leg down. So there is one more further up here, but if we get up here, we could consider this to be a short-term market structure shift if we get a close above this short-term high. So watch out for that. See if we close above and continue, because if we do and we aim for these relative equal highs up here, then we will probably end up aiming for this daily as well. And we would have started a market structure shift to create movement towards this area that's way up here, well past this monthly CIVI. Now, to be fair, we have not even come close to coming down to equilibrium of the larger swing. So I am hesitant to say that this is the bull market turnaround, bull market reversal. That's as far as we're going to go, and we're going to keep rolling. It's really hard for me to say that. But at the end of the day, you know, today I did end up making a little bit of cash on the upside. I should have held the rest of the day, but I can't do that while at work. So, you know, with today's large range day, it'll be interesting to see what it does here, because I think this is the end of a market maker buy model. And we can see basically if we take this internal range liquidity and go above it, how far up can we go? So this is the trickiest question here, because you don't know where it's going to stop. You have key levels that you can look for. And the only and last level I would say that really is of significance is this imbalance up here, because once we hit that, if we reverse, we could still see that as a reversal there. But I mean, if we keep going, we're going to target that monthly premiums to be high. So yeah, I mean, that's what we're seeing on the daily perspective. So that's what I'm going to be looking for tomorrow, is a target towards that 15469.5, and we'll see how we handle that. I mean, let's take that midpoint of that wick is something I'll be watching as well. If I can draw this out a little bit cleaner for you. So this wick is roughly around 15439, we'll call it. And we'll make it into a wick consequent encroachment so that we have that there. And let's see. I need one of these here so I can label it appropriately. Okay, 15439. We can call it buy side wick consequent encroachment. All right. Okay, so outside of that, those are what I'm looking for on the upside. We still see that this area is untouched, so we have those marked out for tomorrow. Wednesday, we could see the high of day this week, high of week this week, or something else to consider is that we started already. We started this week right there. We traded below it, right? And then we continued upwards. So we could end up seeing another nice big green week. But try to keep in mind we're approaching an area of buy side buy side liquidity, right? Or sorry, yeah, buy side liquidity where they shorts that went short here are likely to buy back their positions, as well as smart money who wants to spike it above there. So we'll see what happens. We'll look for signatures, see what Asia and London do, and we will see if it wants to continue its pattern, or now that it's reached the first section here where they're gonna complete this buy market maker buy model. Let's see what happens. I mean, it is quite an interesting chart that they have there, and as it stands, it does kind of look like that we haven't candle closed above that short-term high yet. So if we're bearish, we don't want to see that, or rather we'll need to be quite careful how we trade. So okay, let me check and see. I don't see any chats, so that's okay. See who's even here. Okay, so all right, so I think that is it. No questions here, so pretty late session. Let's see what Asia does. Let's see what London Open does, and then we'll see if we can find some time tomorrow between calls during some of our break times to take a trade as well. Cool. So, hey Kirk, good to see you. I can't tell. This OBS thing doesn't really tell when somebody joins. So thanks for chatting, Kirk. Always good to have you here. Kirk, do you have any questions from today? I know, you know, if there's any questions from you today, happy to answer a few of them before I end up going. Any plays you were looking at today? Any questions on any of the concepts here? Let me zoom in a little closer on this one here. So remember, we talked about a mitigation block, right? So if we look at the bodies of this, low, high, lower, low, higher, high, where do the bodies end up? They end up mitigating right there. This in itself, this bullish breaker, remember on the 1 minute, this was a bullish breaker that we saw. We couldn't see it very much. We saw it swing up, take out buy side liquidity right here. So buy side liquidity within the previous 20 minutes before open. Thanks for asking another time. Tell me anything interesting. Great. So one of the best setups that I see is when I see something like this. Is one of the setups that I take, right? So so before you start 9:30 a.m. open, if I see something like this form, I'm likely to look to see if it rejects quickly from there and to take it down either into this fair value gap or to this relative equal lows, right? So it goes right past that relative equal lows within 1, 2, 3, 4 minutes. Now, that's a low risk entry there, but it doesn't feel like a low risk entry. This is what we call turtle soup. Kirk, you remember us talking about turtle soup way early on? Here's another good example of turtle soup on the smaller time frame. This overall day was a bullish day, but we rode up during New York, right? During this New York Open green section, we rode price up and we got a lot of people long here, right? They're FOMOing here. And what happens when they FOMO? They get completely destroyed right here. And we go down to take out liquidity. So where is liquidity here? So if you recall, that real-time hour opening range low and high, when there's a sizable gap, it can't be more like less than 10 handles or 5 handles. When there's a sizable gap like this, you can expect price to take out immediately close by liquidity and then head towards taking out other liquidity. Relative equal lows here could have been an aim. Real-time hour opening settlement low, those combined could be targets. And of course, finding it going the opposite direction, these kind of turn into relative equal highs, and then you see price move away. So that, and then this return to this is what I really enjoy seeing. If you know that this is a key area that got broken through, and you see fair value gaps formed here, right? And you see a fair value gap coupled with a bullish order block, which hasn't been traded to yet. So there's so much in here that once you gain enough ICT knowledge and backtesting and experience, when you see price come up all the way here, you're thinking, okay, where is the fair value gap that will form? Okay, there's one that kind of forms here. Does it respect it and move up immediately? No. And actually trades down through the midpoint of this candle here. So we expect it to at least start to head down to here and possibly down to this area, considering that the bodies of this candle haven't gone anywhere yet. They kind of like stopped here. So we take into account many different asset scenarios, and we see price ends up coming back down to that bullish order block. And the whole bullish order block is this whole candle right there. It's something that you expect that, hey, if on the day you expect continued bullish movement, then you can kind of treat that as a bullish breaker. So it jacks down from there, takes out liquidity, jumps up, takes out liquidity, jumps back down, takes out liquidity, and then heads back up to our terminus. That is a surprisingly clean play, but it is very difficult to do considering that we've been rising so much throughout the day. So tomorrow, it's kind of tough because we've risen so much. I think tomorrow you're going to see a little bit of volatility during Powell. And so be careful trading during Powell. Same old, look for your targets, know where your stop loss will be. And if you're going to trade it, be very, very nimble. And I will be there tomorrow, hopefully sporadically. And hopefully I can find some trades with you all as well. So with that, I think I need to get some rest. Yeah, let me know if there's anything else that you have questions on, but we'll see what Asia and London end up giving us tomorrow morning. So I think that's it for tonight. And as always, thank you very much for coming. And yeah, absolutely. So the good thing about these streams is that anything I've outlined as a high probability trade setup, you can come back here and study those. I'm not gonna necessarily pull these all together into a train. Maybe I will, but at the very least, you know, we can use these as separate examples of different setups that you learn about in ICT that can be applied in real time. So, all right, well, get some rest, everybody. Hope everyone had a good day today. If not, you know, that's okay. Make sure you have your stop losses there and mitigate risk. And I will. I did get email back from Google. They are gonna make good on me on something that I found to be very unfair, and so I should be able to get that website up and running. Please expect, for anyone who's looking for and needing the new updated risk Excel sheet that helps you calculate based on maximum risk and kind of calculate for you. Please, if you've already signed up to get that, I will email out anybody who signed up to get the newer version free quickly. And then once I get the website running, I'll just change the links. So yeah. All right. Well, have a good night, everybody. And we will catch up bright and early tomorrow. Have a great night. Get some rest. See you in the morning. Peace.